Hello and welcome. This is Business Incorporated. I'm Chimeze Obi Iwago. Coming up on the program, African Union backs call to waive intellectual property rights on COVID-19 drugs. Government commemorates frontline workers with new £1 coins. And Kenya says the first batch of COVID-19 vaccines to arrive in March. Let's get the show started with the intraday market numbers, and starting here in Africa, both South Africa and Nigerian markets were in the red at intraday. The South Africa's JSE index dropped 1.09%, while Nigeria's main index came lower by 0.21% at intraday. The market in Egypt closed the week positive on Thursday by 1.60%. Kenya closed in the red on Thursday, shedding 0.13%. And markets in the Middle East are also closed for the week, but ended Thursday's session mostly positive. In the UAE, Dubai's index gained 0.78%, while the Abu Dhabi index dropped marginally by 0.03%. Elsewhere in the region, Saudi Arabia's index added 0.87%, while the Qatari index closed positive at 1.69%. And European stocks retreated slightly on Friday morning after the market were roiled by a sudden spike in bond yield that sent investors feeling highly valued segments of the market. Let's hear more from Ashutosh. Good afternoon, Ashutosh. While European markets opened in the red, what's weighing on sentiments there? Is it just all about the sudden spike in bond yields?
Yeah, absolutely. That has been the main factor weighing on sentiments here, and that really spooked the markets. You see behind me, that's DAX that opened almost 2% down, and it has since regained some of those losses, but still it's trading in the red. There have been concerns about high bond yields, which have pushed the borrowing cost higher, and they've been climbing over a period of some time now, and that's because people expect that the economy is going to recover. And at the same time, there are fears about strengthening of inflation. So all that is playing a major factor as far as a major role as far as today's performance on the DAX is concerned.
So what options does the ECB and other central banks have to allay concerns?
Well, they've tried to allay concerns by just reassuring the markets that they are not going to tighten the money taps to begin with. That is one thing for sure. But there have been some statements from ECB. ECB has actually taken notice of the borrowing costs going up. This, despite the fact that the borrowing costs haven't been, they are still at, despite the hike, they're still at historical low levels. And but the ECB has taken notice of it. It says that it is monitoring closely, and it is ready to step up its bond purchase program to ensure that the borrowing costs remain in check. Remember, it's especially problematic for Eurozone when the borrowing costs go up for countries. That's because this economy is still not out of the woods. The recovery is trailing that of, say, United States, where recovery is much faster. And that's the reason why they can ill afford to have higher borrowing costs. At the same time, even in Australia, the central bank made some unscheduled purchases of bonds to bring down the bond yields. The Fed has also been reassuring the markets that, well, the loose monetary policy is not going away anytime soon.
And tech stocks seem to be taking a beating. What's behind that?
Well, there are two factors. I mean, one is that there is a rotation taking place now, since there is an expectation of sharper than expected recovery in the global economy. So you see people moving out some part of the investments from tech, which have actually been the winners of the pandemic, and I've actually seen the valuations soar. For many, it's uncomfortable. So they are taking some of the investments and putting into those stocks which are expected to do better now. So these are the cyclical stocks, some of the stocks that took took major battering during the pandemic, the travel stocks, the airline stocks, all these stocks are performing better now as investors bring about this rotation in their portfolio. At the same time, even higher bond yields are having an impact there, because higher bond yields make the tech stocks less attractive, if I could say that. Because now if you look at the risk-benefit analysis, the investors are saying, oh, well, the bonds are giving us such a high return to us, why not put some of the money there? Because we, as it is, are skeptical about the high valuation of some of the tech companies.
Well, Ashutosh, thank you so much. Enjoy the rest of the weekend. Thanks for the update. Well, world markets are rolled today as a surge in government bond yields triggered a sea of red across markets, and UK is not spared. The London stock market opened in the red with the blue chip FTSE 100 index down 60 points. But let's see what has changed this intraday. Juliana joins us now. Good afternoon, Juliana. Well, the drop in the pound had helped the FTSE 100 claw back some of its earlier losses. Bring us up to speed with intraday market numbers. Is the rise in bond yield still denting the market?
Absolutely, Chimmy. As you were discussing in Frankfurt, it's affecting all global markets, particularly London, and all sectors as well are affected. This time last week, the 10-year Treasury yield in the US was risen 1.34%. 24 hours ago, it was 1.5%. Now it's above 1.6%. This is the highest it's been in over a year. I think investors expected there to be a rise, but not as swiftly as it's happening. And it is affecting the markets at intraday. The all-share is down 0.42%. The FTSE 100 is down by 0.42%, and the FTSE 250 down by 0.45%. There had been a bullish run on the pound sterling earlier this week, not on Friday. As we go into the weekend, the British pound is down on the US dollar by 0.72%, down on the euro by 0.03%, and down on the Japanese yen at intraday by 0.61%.
An owner of British Airways IAG has reported a total annual operating loss of £6.4 billion, but IAG's shares are up 6% despite posting that record loss this morning. What's driving that sentiment?
Yeah, pretty ugly results by International Consolidated Airlines. They're the parent company of British Airways and Iberia. But, you know, considering that airlines have had such a tumultuous year, I think investors are just happy that an airline says they can keep going by cutting costs and planning for the best. Really, you know, all airlines are at the mercy of government restrictions, which is why I think IAG's shares have risen by 6% at early trading. At intraday, they're up by about 4%. They have released their statement from 2020 showing that revenues fell 69% if you compare it to the same period last year. They've also said that they don't expect in this quarter for capacity to be above 20% than what it was on the last year. Of course, we have been seeing, especially in the UK, a lot of people have been booking their holidays. In fact, some airlines are suggesting that bookings this summer are up by almost 500%. So I believe investors are, you know, being hopeful and hoping that once, you know, the vaccine rollout across the world starts lifting, then people's sentiment will increase and then they can start flying back in the skies again.
Well, the week is almost gone now, so what should we expect next week?
Almost, Chimmy, just a couple of hours. Next week, there's only one thing that investors in Britain and the British public will be keeping an eye on, and that is the spring budget on Wednesday, March the 3rd, delivered by Chancellor Rishi Sunak. We have had such a crippling amount of issues affecting the British economy, the biggest contraction for any G7 nation. And what is going to propel the British economy is just how much and how deep the government are going to go back into the coffers. There is so much speculation, but nothing has been confirmed yet by the Treasury. We've heard earlier this week that stamp duty could potentially be increased by 3 months. Also, as well, we're expecting a VAT cut to be extended. This is in hospitality and revenue. Continuation of the furlough scheme, which is currently costing the government or the taxpayer about £4.5 billion a month, and also an extension of a cut in business rates. So we're all expecting that. Then on Friday, hot off the tails of that, we have got GDP figures for January. Previously in December, GDP grew by 1%, which is why we managed to completely get ourselves out of that double dip recession. Obviously, January, everything is closed. So what we're expecting, what economists are expecting, is a 2.8% contraction.
Yeah, we'll look out for those data and, of course, the budget next week. Thank you very much, Juliana. Well, I guess we can confidently say, thank God it's Friday. Enjoy the weekend. And stocks in Asia Pacific fell sharply on Friday following late-night drop on Wall Street as a rapid rise in bond yields rattled investor sentiment. Hong Kong's Hang Seng Index dipped 3.64% to close at 29,980.21. Mainland Chinese stocks also fell, while the Shanghai Composite was down by a whopping 2.12% to 3,509 points. It was a similar run for the Shenzhen Component, which slipped 2.167% to about 14,507 points. In Japan, the Nikkei 225 lost 3.99% to close at 28,966 points, while the Topix Index slipped 3.21% to finish its trading day at 1,864.49 points. South Korea's Kospi dropped 2.08% to close at 3,012.95. In Australia, the S&P ASX 200 fell 2.35 to close at 6,673 points. And futures contracts tied to major U.S. stocks were volatile in today's early trade after Thursday's pop in interest rates helped push the Nasdaq Composite to its worst session since October. The Dow Jones Industrial Average futures were nearly flat after earlier dropping more than 200 points in after-hours trading, while the S&P 500 futures inched higher. Contrasts tied to all three indices appeared to rise and fall in tandem with the movements of the 10-year Treasury note yield. The moves in equity futures came after a negative regular trading session on Thursday. And on global oil market, prices fell in early Friday trade as a collapse in bond prices led to gains in the US dollar amid expectations that crude supply to the market will increase owing to prices moving above pre-pandemic levels. Brent crude futures for April fell 18 cents to $66.70 a barrel, following a 16-cent loss on Thursday, with April contract expiring today. The more active May contract fell by 0.5%. Meanwhile, U.S. WTI crude futures also dropped 36 cents to $63.17 a barrel, giving up gains recorded on Thursday. Despite the drop in prices on Friday, both Brent and WTI are on track for gains of about 20% this month as markets have grappled with supply disruptions in the United States, while optimism has built for demand to improve with vaccine rollouts. And gold prices edged higher after hitting a one-week low today, but remains on course for a second straight weekly and monthly decline as brighter economic outlook and inflation fears buoyed U.S. Treasury yields. Spot gold gained 0.2% to $1,773 per ounce after falling to its lowest since February the 19th, while U.S. gold futures fell 0.2% to $1,771. Meanwhile, spot silver shed 0.2% to $27.34, but is poised for a third straight monthly rise. Platinum rose 0.6% at $1,223 an ounce, and palladium climbed 0.8% to $2,420. Away from the markets, the African Union has supported the calls for drug makers to waive some intellectual property rights on COVID-19 medicines and vaccines in order to increase rollouts to poor countries. According to the continental body, the support is in line with proposals made by South Africa and India at the World Trade Organization in 2020. Despite facing opposition from some developed nations, the groups believe that intellectual property rules are hindering the urgent scale-up of vaccine production and provision of medical products to some patients. The director of the Africa Centers for Disease Control and Prevention says the intellectual property transfer was a win-win for everybody that would address the huge inequalities in global public health. Well, we'll take a break now. When we come back, we'll bring more stories from the African continent. Do stay with us. On Wednesday this week, South Africa's Finance Minister Tito Mboweni presented his 2 trillion rand budget for 2021, where he said, and I quote, "This is definitely not an austerity budget, but the truth is that we owe a lot of people a lot of money," unquote. Now, the minister also backtracked on planned tax increases, announced that the levy for companies will be reduced from April 2022, and stood firm on plans to rein in the state wage bill. Well, let's talk more about this with our South African correspondent, Brian Fubeni. Hello, Brian. Good afternoon. Good to see you.
Afternoon. How are you doing?
Very well, thank you. Well, what do South Africans make of the 2 trillion rand spending plan of the government? Do they think it's feasible, especially at a time when the economy is struggling?
Well, like you say, the economy has been struggling even before COVID, and a lot of people were waiting to hear what the finance minister will say in his budget. And the 2 trillion is just a far-fetched amount, which people are saying, even though he said the budget is 2 trillion, but the country still has a budget deficit of almost 700 billion rand. So we have to understand that in South Africa, there is a huge gap between the very rich and the very poor. So COVID-19 didn't help with all of that. So finance minister said that the key aspect of trying to close that gap is social infrastructure and job creation, which has been something which has been sung over and over again, but government hasn't really put a solid plan to say where exactly are the jobs going to be created. So I think this is an opportunity right now for the private sector to step in and create those jobs. And yes, so we'll see how that goes as time goes on.
And then budget deficit for the 2020 financial year has been revised down to 14% of GDP. Is it somewhat of a surprise to most of the economies there? After the minister forecast the budget deficit will hit a record 15.7% of GDP during his emergency budget announcement in June last year.
Well, exactly. It has been a huge surprise that the budget deficit is smaller than what was previously projected by the finance minister. I think this boils down to, we can say that government spending has decreased a bit, but really it's not that. It's really because of the COVID-19 pandemic, which has caused most of what was set aside to go and alleviate the economy not being spent. So government has been saving money from the money which is supposed to go to the economy before COVID-19. So most of the resources now going towards the COVID-19 vaccines and procurement of the vaccines and the rollout of the vaccines. But yes, we were hoping to see what will happen with government spending in the next coming months before the midterm budget speaks itself, and see where the finance minister will find loopholes and gaps to close that the projected deficit.
Now let's talk taxes now. South Africans have been given some breathing space. Not only will there be no tax increases, but they will also be getting an above inflation increase of 5% in personal income tax brackets and rebates. How are people reacting to this? You also get to benefit.
Well, I think with the tax increase and decrease is one of the most controversial and situations where people want to see whether the finance minister is going to increase or decrease. This time, luckily for most, there was no increase. But there was an increase on in tax, which we are now accustomed to, where the finance minister always increases taxes on your alcohol, your tobacco, you know what I mean? So that's already with the already ailing economy and that industry being strained because of the lockdown regulations, where we've seen where they stopped the sale of alcohol for a while. So increasing taxes on that particular front and already training that industry as well is a big problem. But yes, it will help us with the other places where tax was not increased. So we'll have a little bit of money to spend as well in the coming months. Hopefully in the midterm budget speech as well, there won't be any increases.
I see. Well, Brian, just before I let you go, tell me, how is the vaccine distribution coming up there?
Well, we're expecting more vaccines over the weekend. Health Minister Zweli Mkhize said they'll come maybe on Saturday or Sunday. So we'll be keeping our eye on that and seeing how many of the vaccines will be coming from Johnson & Johnson. But like we said before, at the moment, the vaccines are set aside for frontline workers, which are your health workers, people who are in direct contact with COVID-19 patients. But as more vaccines come through, those will be distributed to each and every industry, going from your frontline workers, people who work with people directly, then to the elderly, going down to those with COVID-19 and underlying diseases.
Great. Thank you very much, Brian. Enjoy the rest of the weekend.
Thank you. Same to you.
And Egypt has produced around 15 million coins commemorating doctors on the front lines of the fight against the coronavirus disease. The coins bear the slogan, Egypt's medical team. Let's watch this.
The new line of coins include 10 million £1 coins and 5 million PT50 coins to spread awareness. The coins are meant to be exchangeable, regularly used by citizens.
All other government branches to commemorate medical staff teams. There were two ideas, either work on a gold and silver collector's edition coin or work on exchangeable coins. We realized that exchangeable coins that have symbols of medical staff, which include doctors, ER workers, nurses, and even administrative workers, would be more popular because it would be with everyone, not just enthusiasts who buy coins. The decision came out and we really did produce 10 million pieces equivalent to the pound and 5 million pieces of the 50 piastres that have the symbol of medical workers. That way it is in everyone's hands, everyone who buys and sells. This produced more awareness and more of a national celebration of medical workers.
While many appreciate the newly minted coins, some believe that more should be done to support medical workers on ground.
For there to be a commemorative coin is something that is surely appreciated by doctors. We thank the government for doing this for all medical staff. Commemoration on the ground would be more effective. For example, treating martyred doctors like martyrs of the state would be more effective on the ground.
Egypt has taken a number of steps to support medical workers, which include raising salaries for around 600,000 doctors and nurses at a total cost of 2.25 billion Egyptian pounds. As of Sunday, the 21st of February, Egypt recorded a total of 177,543 cases of coronavirus and 10,298 deaths.
In the meantime, news coming out of Kenya says that the country will receive its first batch of COVID-19 vaccines in the first week of March. A statement from the country's presidency explains that healthcare workers, frontline workers, and vulnerable population groups will be given priority based on the distribution framework ratification by the cabinet. The health ministry said it was seeking an extra 11 million doses of COVID-19 vaccines from major pharmaceutical manufacturers like Pfizer and Johnson & Johnson, in addition to the 24 million already ordered. It added that the extra doses will be acquired through the African Union's Disease Control and Prevention Body, which has been pushing for its 55 member states to buy more doses in a bid to immunize 60% of the continent's 1.3 billion people over the next 3 years. On Wednesday this week, Ghana became the first African country to secure vaccines through the World Health Organization's Global Vaccine Sharing Scheme, COVAX, acquiring 600,000 doses of the AstraZeneca Oxford vaccine produced by the Serum Institute of India.